Hi, my name is Joe Hillhouse, and I'm from Warrenton, Virginia. I received funding on August 3rd, and I completed the evaluation in 15 days. I did the 100,000 account, and I chose this account because I felt like it had the best value in terms of the target requirements versus the subscription cost. One of the things that I was looking for was trying to get a desired income, and with the funded account, I would have less risks to blow it up by having the lower contracts. And so that the 100,000 account made it easier to be successful, and it was lower cost. My trading approach is defined as reversal based. I look for the retracement opportunities. So I chose OneUp Trader because the criteria is simple. Trading it's really hard to be consistent. And like any skill, it requires constant learning and practice. And so I wanted to focus on learning that skill rather than trying to deal with all of the requirements, such as improving my technical analysis skills, making better economic report sentiment predictions, and being able to have the opportunity to focus on that rather than breaking rules was one of the reasons. And then while I understand that the stricter rules can help overall, it's also discouraging when you're constantly blowing an account while also trying to learn. And so wanted to set myself up for success. No, absolutely. I think that there are free or perhaps cheaper ways to simulate trading, but you're not really working towards something specific. It doesn't simulate the real emotions that you go through. And so when doing the OneUp evaluation, I knew that I wasn't losing real money, but it was also real in the sense that if I blow this up, I'm going to have to pay to reset the account. And then also there's that goal that I'm working towards of having a funded account. And so like one of the most challenging things is really controlling that emotions aspect. And so being able to have that simulation aspect that has the goal of being funded with a loss of having to pay to reset, it kind of simulated more closely the emotions you go through versus just doing manual paper trading through a chart. I reached out to the support team on a regular basis, and by far, like phenomenal support. One of the best companies support experience I've ever experienced with as a customer. I would say at least on par with Amazon, who's known for their customer obsession, if not better. With Amazon and many of the companies, it's just so complicated to find contact numbers or even the web page to know where to talk to someone. And oftentimes when you have to call, you're waiting forever going through a million automated like steps of press 1 for this and 2 for that. And it was just so easy with OneUp where the support chat was on every single page. I hardly ever had to wait like longer than a few seconds. And then secondly, everyone was so knowledgeable. Like so many times I've contacted customer supports and I'd have to call back because it felt like the person I was talking to didn't understand my problem, the question, or just was confused. And I would try to get to somebody else. It was not like that at all with the OneUp support. Super knowledgeable, super friendly, and always available. It took 3 days. I completed it on Friday, July 30th, and was funded Tuesday, August the 3rd. And it was a completely smooth transition. Felt very much like I was doing the same thing as before. The only difference was that it was a little more stressful because I hadn't had my balance built up. And so I was kind of back to that ground zero with the drawdown. And then also knowing that if I couldn't just reset it, made it more stressful as well that I have to start over. But as far as the transition goes of what the experience was like, it was very smooth. No, I didn't, and there weren't any hidden fees that wasn't previously communicated. The only thing was that if you're using NinjaTrader, you have to get a license because it's third-party trading. But other than that, it's nothing unexpected. I engaged with their support regarding some of the rules that were mentioned in the contract. And it depends on the rule that you break. There are 3 hardcore rules: the trailing drawdown, the dynamic scaling contracts, and the permitted times and instruments to trade. Touching the trailing drawdown is an absolute, or going past is an absolute no-no. And holding positions overnight is another hard rule because of the margin changes that go from intraday to overnight. So one of the concerns that I had was regarding the economic releases, but that's something it's less strict than what I was worried about because basically for the indices contracts that I trade, the Dow Mini, S&P Mini, and NASDAQ Mini, it's major Fed releases and announcements and the unemployment reports. So not the random Fed things that come out and Even they mentioned on the FAQ for OneUp that the treasury auction, and I had a question about that, and that was something where they said it's more of what they monitor and look to be cautious depending on your trading style. So there was an instance of someone trying to do like high frequency trading during that type of environment that was quite unsuccessful. And so it really just depends on your strategy and which kind of constraint you're violating. So some of those other constraints relate to having a certain amount of trades completing in a week and profit target things like that. Those are less flexible and they kind of take the bigger picture rather than these harder boundaries that are really there to limit loss. No, I looked into other ones and I thought about it, but and when I originally started, had compared OneUp Trader to Top Step and ended up making the decision with OneUp Trader and haven't looked anywhere else since then. Yeah, so I was targeting $600 per day on average, which is roughly $13,000 a month. That's kind of what I was trying to set as an withdrawal target. But I realized that even just maintaining a positive rate over a period of time is going to take practice. And so after having blowing some accounts multiple times over, I'm looking to be more consistent with smaller profit targets. And currently that's set at $200 a day. So I use various indicators and trying to optimize which ones combined I feel like help me the most. But currently I use RSI, OBV, MACD, Bollinger Bands, and VWAP. And then I found the VWAP to be the most helpful with the retracement strategy. It generally thinks when it's in the trend and it hits the top of the VWAP, it kind of falls down to the middle VWAP line. And then when it's going down and it comes up, it goes back down. And so that overall has been really helpful throughout the day. And then also it aligns well with the Bollinger Bands too. It's not 100% perfect, but the VWAP and Bollinger Bands have been most helpful. And I use the other ones just to get an idea of where things are going. When I first wake up, I check my orders overnight. One of the reasons I like futures is because it's trading all day, and I find the overnight to be often easier than during the day because it's more based on technicals and forecasts of the next day rather than the actual underlying. So like the S&P is doing during the day can be quite more volatile. And so that lower volume during the night also helps it to have more room for error. And so I'll check the charts to see what things are doing and read through posts on social media, like stock twits. I haven't done the full statistical analysis, but oftentimes feel like there's an inverse relationship to the major sentiment on social platforms against the performance of the day. And so like if people are super optimistic and bullish, like the performance kind of goes down, and the reverse, just because social media attracts more of a groupthink mentality where you're looking people to affirm you rather than to kind of give a more objective bias-free direction. And so then after that, I will generally look at for economic reports that come out roughly around 8:30 Eastern is often when they come out, to try to make a prediction of the reaction before, during, and after. And sometimes if it's not a major thing or an unallowed economic report, I will get a position against it aligned with that. And then it's pretty quiet until the opening bell. I generally try to reach my profit target or my daily loss that I allow for myself by the opening bell, so I can like focus on the day job without stressing about it, and then also leave the rest of the day for more learning. No, absolutely. I think the two things are risk management and emotional intelligence. And in my opinion, I feel like those are the two hardest skills. You can be the best technical analyst, and technical analyst requires learning for sure. But where I've messed up the most in the past is not necessarily in the direction, but in risk management, where I over leveraged and and then in the emotional intelligence aspect of not exiting when I should have and exiting too early. And so one of those things that the OneUp experience teaches you through that is how to manage that risk correctly while giving you the freedom to enter higher risk positions. It teaches you the consequences of doing so. While the reward can be great, that consequence is kind of severe, and it's less severe than real money, but it's more severe than if you had just been patient with better risk management. And then from the emotional intelligence aspect, it's something that there is that kind of sense of success that you are working towards and trying to get funded, as well as that cost aspect of having to pay to reset. And so it helps simulate that some type of real pressure that you would have with a funded account. It's not as much, I would say. You do feel like the stakes are higher when you get to that funded level because they are higher, but at the same time, it's definitely more real than just paper like chart trading, and it's something that I feel like is going to continue to make my skills improve, even if I like the more I do it, even if I do like lose through a funded account again, it's each time I go through the OneUp process, I learn more. Sure, I would say if it's something you want to do, then stick with it. I think that the biggest challenge that people come into trading is that there's all of this social hype of how you can make so much money. You hear of stories of people making millions, like that started with $100 or $1,000, and on really like essentially gambling plays and all of the crazy success stories. But you don't hear of all of the failure stories of where people lost and they quit, or of all of the times that people like gave up after losing. And so that can feel discouraging of that, like, why can't I be successful when all these other people are so successful? But you don't see all of the times that the people that were successful long term, and not just through like one random event, applied themselves and studied and continued to learn and continued to practice, because trading is like anything else in that it's a skill. While there is a sense of like uncertainty around it in terms of like no one can predict the future, there is that skill of risk management and that skill of being able to forecast within probabilities that can set yourself up for long-term success. And so over, like they say that the experts over like a long period of time, like 10 years, even don't perform that super crazy. They don't necessarily beat the market, but at the same time, it's something that they're looking at a period of, trading is not about like your average returns over a long period of time. It's about, how do I generate income? It's more of an income strategy rather than a like long-term like growth strategy of where I just put my money in a place and I don't look at it. And so it's really a different comparison. And if you're looking to trade, if you're looking to be a day trader, if you're looking to have a career that's involved around that, then just stick with it if that's something that you want to do, because consistency is key. It's going to take practice, and don't give up.